Are we back? Test, test, test. It's weird. It was registering, and then I guess all of a sudden it wasn't. All right, there we go. Sorry about that. I don't know what the deal was. Sometimes you just got to give it the old refresh. So my bad. My bad, guys. So went on a 5-minute rant about everything. You guys saw what I was seeing here on the screen. I was talking about the S&P 500 and how it was having a decent bounce back day, which it is, and that we have some really exciting earnings coming up here with Cisco, Fastly, Twilio, among other ones. If you guys are interested in some of the other ones that are coming out, such as Occidental Petroleum, or HubSpot or Upwork, even QuantumScape, I'll cover those. Albemarle is also reporting earnings today too. So if you guys want me to cover any of those, I will. But I figured the top three for me were Cisco, Fastly, Twilio. But the rant was about how no one listens to you. Listen, everything I said there was actually amazing, and it's a shame you didn't hear it. Oh my God. Nima said I'm talking to myself. Oh my goodness. They went on for a while, didn't it? Not working on my end. There we go. Oh my goodness, that is hilarious. Well, I appreciate you guys trying to help me out and not making it and not help me not make an ass out of myself. But yeah. Anyways, look, all I was really trying to say was with the S&P 500, we're seeing a decent bounce back day, but I do think that there is some there still is a high possibility of some sort of correction down to 4,800. I was talking about that yesterday. I think between now and the end of June, we could see that correction, some volatility taking place. You know, the CPI numbers yesterday weren't great, and it's been there's been this argument about whether or not we're going to see rate cuts, and I think that there's still a possibility we could see 1 or 2 rate cuts, but it's not going to happen until towards the end of the year, in my opinion. I mean, Jerome Powell has said as such, so I think that overall, if we're looking at the overall market, I think that that correction on the 4,800 seems reasonable because of what we're seeing from CPI, and that there is no signs of rate cuts happening at least anytime soon. So I think we see some of this cool off, as I talked about yesterday. I think some of these stocks were getting ahead of themselves in anticipation of some sort of rate cut or some sort of talk of a rate cut. But look, we've seen rate increases last year, and last year was an incredible year for the S&P 500. I don't see any reason why we still can't end in the green this year in the stock market, but it's not going to be straight up, in my opinion. And so far this year, for the last 6 weeks, it's been straight up. Just about. I mean, you can count with one hand almost how many red days we've had since the beginning of the year. That's not sustainable. And so I think that seeing some sort of correction makes a ton of sense. I think it actually ends up happening soon. Don, of course, wrote this or drew this trend line here since the beginning of the year. And it's just there stepping up that trend line. But at some point, I think that we do see that correction. And you can see NASDAQ is also having a pretty nice bounce back day today as well. But I just don't know how long this carries on for, but yeah, I think that we'll see the move to the upside towards the end of the year when we actually hear more about rate cuts, if that even happens. Mike said probably gave out the secrets of the universe. Yeah, in fact, I actually have the winning lottery numbers. Too bad you didn't hear them. I appreciate you, Nima Dog. You really did. You really did try hard. Benny, yeah. So I actually mentioned at the top of the show, once the audio came back, that I'll cover Oxy if anybody was interested. So looks like there is some interest there. So I'll be happy to do that. I'll be happy to cover Occidental Petroleum too. Let's get into that. So we have Cisco. That's going to be reporting earnings today. Let's go ahead and we'll split the screen here. So that way we'll be ready to go once things happen. And let's pull up Fastly on this side. So right now, let's get to the 5-minute chart. You can actually no wait. Let's keep on the daily for Cisco. Um, Cisco's on the left side here, as you can see, and it's actually been doing quite well at this support at around 49.76. Let's just call it $50 to make it easy. So sitting at $50 a share, and there's some positive things to like with Cisco right now. I think that we could see a decent move to the upside. Obviously, this is kind of one of those dinosaur tech stocks, but it's cheap. It's trading at 13 times next year's earnings. Market cap's at 201 billion. They're still growing, if you guys can believe that. Um, the catalyst that could bring it all down though would be demand, and that's what a lot of people are kind of concerned about. If you guys haven't checked out what the expected earnings are, it's 84 cents a share. Revenue expected to come in at 12.7 billion. San Jose, California based firm is anticipated to report second quarterly numbers and forecast third quarter numbers largely in line with estimates. So if they come in above that, expect Cisco to have a pretty damn good day. They proposed a $28 billion acquisition of cybersecurity company Splunk. Remember Splunk went bananas during COVID? I mean, a lot of stuff did, but Splunk was one that a lot of people were high on. It's currently under scrutiny of the European Commission with a decision expected by March 13th, which is also free agent day in the NFL, in case you guys were wondering. So if your team has a lot of good players that are free agents, might be an interesting day for you and Cisco. By the way, real quick, just a quick pause. Obviously we talk stocks on here, but I'm super pumped in the world of sports because pitchers and catchers are reporting. If you guys are baseball fans, it's a good day for you today too. I'm an Orioles fan through and through, born and raised in the area, and I'm super pumped that the Orioles are actually a legitimate team. Best team in the AL last year. I think there's a lot more to like this year. If you guys haven't checked me out over on the Ryan Ripken show, I actually cover sports. I have a sports channel over there too. So go check me out over at the Ryan Ripken show. If that's something you guys want to chat about, we're growing fast over there too. I'm loving it. It's a ton of fun. And super pumped for what's to come for baseball season. I know a lot of people are like split on that, on you can't watch baseball and all you do is watch baseball. It's very interesting to see how people react to the game of baseball, but nevertheless, let me know what you guys think about that. If you're pumped for baseball to show up, or no, you don't give a shit, it's cool. You just don't like sports in general, that's also cool. We take all types here, but you guys know how big I am in my sports. So, but nevertheless, that was Cisco. Fastly, here's your daily chart on Fastly here. It's on the right side of the screen. And Fastly's actually had a pretty decent comeback. If you guys haven't looked at it in a while, over the last 52 weeks, it's up 90%. And it is actually at a pretty decent, interesting spot for Fastly. You can see that it popped up over this resistance, kind of a cup and handle pattern. We haven't talked about cup and handles in a while, but this is a nice looking cup and handle pattern. They come in with decent earnings. Fastly could have a decent run. I think edge computing obviously is going to be the topic of discussion here. AI, of course, going to be front and center. Increasing demand for faster online services. The rise in cybersecurity stocks attacks. We've seen how cybersecurity stocks have continued to just explode really over the last 5-6 years. They just continue to go up. And I don't see that slowing down anytime soon. Just ask Mike Cutson, who's a friend of the show, watching the show. Cybersecurity also just continuing to ramp up. And so the need for AI applications are catalysts for Fastly's growth. We saw what Fastly did during COVID in 2020 into 2021, went all the way up to $100 a share. It's sitting at $23.58 right now. So they come in and start talking about growth and demand. I think that Fastly could actually be one to start loving again. This is one that was really kind of hated for a while, but I think there's some reasons to like it. Growth is going to continue to be the story here. Last quarter, they reported 18.5% year over year growth in revenue. They come in above that, their stock should do well. So I'm actually kind of excited to keep an eye on this one. Expected earnings per share is a loss of 2 cents, $139.97 million in revenue. Not a whole lot of analysts covering this one, but we have 2 upward revisions to 0 down. So not a whole lot of hate on this one, but This one, this was actually one of the best calls I made during COVID. If you guys were around then watching the channel then, I I believe my call on Fastly in May of 2020. This was one of those stocks in May of 2020 that was like one of my underrated stocks. It went from this $23 area all the way up to what $130 or whatever it was. So it was one of my better stocks that I called out. It was this one. MGM also went crazy. And of all stocks, it was also uh, uh, Williams Sonoma of all things. But it made sense because everybody was cooking at home and they needed cookware. So like that stock also went crazy during COVID. Still a great company, still great stock, but it just obviously has settled down with everything else. So there's your Fastly expectations. Let me check in with you guys. Um, who doesn't like sports? Says Nemo Dogs. A lot of people don't like sports. Um, Niners deserve to win. I know, man. If you guys watch the Super Bowl, it was tough to watch, especially if you were a Niners fan or you just were a Chiefs hater. um, Snooker says possible buy on Albemarle after earnings. Yeah, we can take a look at that too. Let me get through a couple more of these. Twilio also having earnings, and that stock is already up. So let's go ahead and cover that one. I'm going to pull up Occidental Petroleum because that's the next one that I want to kind of cover. But Twilio is on the move here. This is another one that got beat to hell in 2022. Once interest rates started to hike up, this one got absolutely crushed. But it was another kind of COVID darling. This is expensive though. It's trading at 31, 32 times next year's earnings, $12.5 billion in market cap, and looks like they just came out with earnings. Before I get look into that, expected earnings per share on this was 58 cents, $1.04 billion in revenue. Growth was expected, or sorry, growth is quite good for this sector, 12.5% year over year. And 16% forward is what is expected on revenue growth. And so let's go ahead and take a look and see where those earnings came in at, because it looks like the investors are liking it so far. Let's see here. And once we find those earnings, I'll of course let you know what my thoughts are on what the trade could be on this or what the trade should be. If you guys are looking for a short-term turnaround on Twilio, let's see. I don't see anything just yet, but looks like the stock is popping. It's up. Well, it looks like it's retreated some. It could be. Let's zoom in here on this a little bit. So there you go. There's Twilio. It's up 1%. It was up 4.5% on the day today. Zooming in on Occidental Petroleum. If you guys were curious about Occidental Petroleum, let's it's going to take a while for those earnings. If the stock even moves. Usually these energy stocks don't move a whole lot unless something crazy happens. But this is a little bit on the expensive side as far as energy stocks are concerned. It's 15.5 times next year's earnings. So I wouldn't say that it's too expensive. I would just say that it's much higher than most other stocks in this sector. Um, for Oxy, we all know this is one that Warren Buffett's heavily invested in. Bought a shit ton of it last year. It's done quite well. 69 cents per share is the expectation. Almost $7 billion, $6.87 billion in revenue. Lots of downward revisions on this one. So we'll see where that goes. But that's your expectations for Oxy. Once those numbers come out, of course, I'll be happy to share that with you. Let's go ahead and bring this back to Cisco's chart. Doesn't look like there's too much movement on that. It's up around 0.25% right now. There, and now Twilio's tanking. Now it's tanking. It's down 4%. So it gave back all of its gains today so far. Oh, still getting crushed. Down 9%. All right, those earnings are definitely out now. Let's see here. Don't see anything just yet, but it's getting killed right now. By the way, as I look through these earnings, make sure you check out the description down below. There's a link down there for a free email list. I put out emails every day to give you guys the expectations on all the stocks I'm covering here. Usually, I just pick one that I think is particularly that stands out in particular. But sometimes I'll add a few in there. So if you guys want that email list, it's absolutely free. Doesn't cost anything. Just helps me grow my community. So would appreciate it if you guys helped me out in that way, and you wanted to show some support, want to get something out of it. Go ahead and sign up for that email down there with TradeStream. Again, it doesn't cost you anything. It's free. So feel free to go check it out. Twilio is down 8.5% still. Waiting on those numbers. They're still not out. Well, I'm still not seeing them, I should say. They got to be out. It looks like they might have beat. Let me just double check this. As we all know, beating earnings doesn't mean shit. 58 cents per share was the expectation. I'm seeing that they came in at 86 cents per share. $1.075 billion in revenue. That looks like it's also beat. Yeah, 1.04 was the expectation. Huh. Let's see what's going on here. It's got to be guidance related. Q1 revenue. Yeah, here's your guidance. Yep, they missed on guidance. Q1 revenue expected to come in at 1.03 to 1.04 billion. The estimate on Q1, the current quarter that we're in, was supposed to be about 1.05. So guidance coming in below by about $10 million. So I don't think that's a real big deal. They see organic revenue 5 to 6% increase, which is actually far lower than what we were expecting. Remember, I told you forward revenue year over year was at 16%. So the expectation was 16% over the next year. And so that 5 to 6% revenue guidance is far lower than I think many were expecting. Q1 adjusted earnings per share at 56 cents to 60 cents. The estimate there was 55. So Q1 adjusted earnings per share is actually above expectations on guidance, but the growth in revenue missed. And so that seems to be one of the big reasons why it's tanking. I think this is a bit of an overreaction with it being down 10%. Could be a good opportunity here for Twilio if you guys are big fans of this. Let's expand it out to the daily. So we take a look at the daily chart here, and you can kind of see it's trading at 65.88. So that's right here. See where this blue cursor is? You guys can see it on the right-hand side. Again, this is a right-hand chart on Twilio. It's at 65.44 right now. This zone here at around 64.05 could be the spot to take a look at and see if it's worth grabbing there. I think that if it holds that spot, might make for a good trade if you're looking to go long on Twilio. Kind of like it there. Let's go back to the 5-minute so we can get the real-time action on this one. And actually, what you know, it looks like it's already kind of bounced off of that. This holds this area. By the way, shout out Don from the Don Fran Show. It's like he knows. It's like he's got that crystal ball, you know? But it came right down to that zone. It's got to hold it here, so we'll see. But bounce quite nicely off of 64. Actually looks like a pretty decent spot there. So let's take a look here at Cisco. Let's go to the 5-minute chart here on this one. That stock is now selling off. Man, yesterday we had a great day of earnings, and so far it's not great today. Let's see what we got for Cisco. Remember, I had mentioned that Cisco's earnings were expected to come in at 84 cents a share, 12.70 billion dollars, but all downward revisions on this one. There's 24 analysts from the street on Cisco. They all were bearish on this one. So far, it looks like they were probably right. Let's see what we got on those earnings. They see fiscal revenue. This is their guidance. Fiscal revenue 51.5 to 52.5 billion versus 54.33 that was expected. So miss on guidance for the fiscal year. Probably a big reason why the stock is down. And remember, we talked about that. Talked about that. And so I see a lot of people also uh, wanting to know what's going on with Tesla. Elon, oops, Elon looking like he's getting back in the game here. So stock is up 2.5%. If you guys didn't catch the news, here's what happened. A 13G filing came out on Tesla. Elon now owns 21, almost 21% of Tesla, 20.5%. That's why the stock is up. See if I can give you more context on that 13G filing. Now, remember, this was like something that Elon wanted to get back into. He wanted to start owning more of the company. I think there was a lot of controversy around that. To be honest, I haven't followed it that closely to really, give you all of the information on that. But I know that there was some conflict with Elon and Tesla board members and basically how much he actually owned. But looks like Elon won out and 13G filing came out, and now he owns 20.5% stake in Tesla. I don't know what this is going to mean. We heard Elon talking about splitting Tesla up, kind of making mention of the multiple kind of small businesses. I won't say small, kind of businesses that are within a business, startups, are all within that business. AI being one of them, Neuralink, and the solar side. Obviously, there's the automotive side, and so I don't know what this means. Maybe this means he's got more. He's going to have enough power to kind of make the things happen that he wants. But here's what happens here on Tesla right now on the 5-minute chart. Came up to the top of this zone and got beat down. It doesn't look like there's enough interest on that 13G filing to get it above that 194.60 resistance. So watch for this to come back down. I wouldn't chase it up here. Expected move on this, however, if it breaks above that zone, is at 202.67. So that'll be the next resistance I'd watch out for. But right now, I don't think this is something that has really garnered a whole lot of attention just yet. And we'll see as more people start to see this news as it has just broken. But right now, it seems it's gone up to that resistance and gotten rejected. So I would be cautious here on chasing Tesla right now, at least until it comes back down to retest that support, maybe about around 184 or so. It's right now trading at 192. So I don't know if I'd go chasing after this one. Let's see here. Savvy Money Show says, so glad my Cisco call didn't fill. Yeah, no shit. What's up, Michael Hanna? Good to see you, man. Dakota Craft says he's going to resume AI division. Good news for Tesla. Maybe, and we've talked about this on the channel before. Don from the Don Fran Show, I'm sure we'll speak on this tomorrow. He'll be live tomorrow evening around 7:00 Eastern time, and so he's kind of your Tesla guy. Loves to trade around this one, so he'll give you his opinion on it, I'm sure. But this is one that I think that I probably would steer clear of, at least right now. It's kind of in no man's land between these two zones. I don't think I would go nuts on this. You can kind of already see that there isn't a whole lot of buying pressure on this one, and in fact, it looks like some are selling this. One of the big reasons is, to your point, Dakota, Elon has spoken about breaking the AI division away from Tesla, which would actually make Tesla less valuable. So I would just be cautious of that. I don't know how good, if that's good news or not. We'll see. He says a lot of things and then changes his mind on a lot of things. So kind of hard to read Elon sometimes. If you guys were curious about Cisco, the stock is down. They missed on guidance on revenue, but they did beat earnings. They came in at 87 cents, beat earnings by 3 cents there. Revenue came in at $12.8 billion. The expectation there was 12.7. That is a slow of growth by 6%. So 6% slowing of growth year over year on Cisco, despite beating earnings there, total software revenue was flat year over year, and software subscription revenue up 5% year on year. Total annualized recurring revenue at 24.7 billion. That's up 6% year on year, and product annual recurring revenue up 9% year over year. So it's not bad news for Cisco. It's just not exciting. It's not all that exciting. Remaining performance obligations, or RPO, at 35.7 billion, up 12% year on year, and RPO up 12% year over year. Sorry, product RPO up 12%. Dividend, they did increase that by 3%, so it's now sitting at 40 cents per share. Guidance was the killer. Revenue revenue 12.1 to 12.3 billion versus 13.1 consensus. So pretty big miss on guidance revenue. Earnings per share is expected. This is for the fiscal year, by the way. Q3 fiscal year. So Q3, the current quarter that we're in right now, that was the guidance for that. For revenue, earnings per share is expected to come in at 51 to 56, non-GAAP 84 to 86 versus 92 cents. So a miss on revenue and earnings per share for the current quarter. Guidance looks like it also came in below expectations, 51.5 to 52.5 versus 54.47 on the consensus there for the full year. Earnings per share also coming in lower on expectations, $2.61 to 273. Expectation there was 387. So, yeah, not great. Not great earnings for Cisco, despite beating the current quarter the quarter that they're reporting on. The current quarter was the real letdown there. Let's take a look and see. I haven't looked at Fastly's earnings just yet. We'll come back to Tesla if it's worth coming back to. Right now, there doesn't look like there's much going on. Fastly tanked. Wow, this is disappointing. It's down 17.5%. Holy shit. It was on such a good trajectory, too. Let's see what we got here on Fastly. So they beat earnings. They came in profitable at 1 cent per share. The expectation there was a loss of 2. They came in and missed on revenue, though. They came in at 137.77 million. They missed by 2.2 million. And 12-month net retention decreased to 113% in the fourth quarter from 114% in the third quarter. Total customer count was 3,243, so 3,243 in the fourth quarter. That's up 141 for the fourth quarter. That's up 141 from the third quarter. 578 were enterprise customers in the fourth quarter, up 31 in the third quarter. Average enterprise customer spend of 880,000 in the fourth quarter, up 3% quarter over quarter. That's not terrible. Annual revenue retention rate was 99.2% in 2023, increasing from 98.9. That's a great number. So people who sign up with them don't leave. 99%, 99.2%. That's great. That's a great number. Guidance, total revenue of 131 to 135 versus consensus of 136. Another reason why we saw this sell-off. And a loss of 9 to 5 cents per share versus a loss of 3 for Q4 guidance. Also not great. For fiscal year 2024, total revenue 580 to 590 versus 587. So coming in line there, but on the low side. Non-GAAP earnings per share of a loss of 6 cents versus flat. The consensus was flat for the entire fiscal year. So slowing of demand, and we kind of touched on that a little bit, even though I thought that we could see some positive movement out of Fastly. 17.5% doesn't seem, it seems a bit much. It seems like an overreaction. So can we capitalize on this? Let's take a look and see where we're at. So the daily chart is pulled up here now on Fastly. It's trading at 1942. And honestly, that's a pretty decent support. Here's your support on Fastly right now. Let's see. So right here, right at 1942, you You can see that this was a previous resistance. As we all know, old resistances become new supports. So we saw a resistance at 1942 back in December 20th of last year, and then another one in September of last year before finally breaking out. And now that it's retreated back to that level, I kind of like it here. I kind of like it here to go long. Now, look, you can all say that that's a falling knife you're trying to catch, and you might be right. Anytime you try to catch a falling knife, chances are you probably bleed a little bit, and I'm not going to deny that. But look at this. Oops. Here's your resistance. I'm going to bring us out over here too. But there it is, guys. Kind of like that there. Kind of like that to go long. I mean, it's sitting right there right now, and it hasn't fallen below that. Fastly looks like a good trade to go long in on. Cisco is God. I remember I think it was one earnings season. I had Costco and Cisco reporting on the same day. It was a long time ago. What a terrible day to be reporting earnings live like that. Screwed it all up. Michael says Fastly is a good product and they have great software engineering team and use a cutting edge tech stack. Yes, I agree. And the AI craze is only going to enhance that. Joe T says everything's flushing. Yeah, especially compared to yesterday. Yesterday was such a great day. I mean, Lyft went bananas. Where is Lyft right now? Lyft was up 35% today, and we watched it go up 30% after hours yesterday, which, by the way, if you missed it, could be because you're not subscribed or hitting that notification bell. So go ahead and do that for me if you don't mind, and we can react to earnings tomorrow. You won't miss those earnings. Tomorrow, we got another great day for earnings tomorrow as well. Tomorrow there is, I'm going to be going bananas tomorrow. DraftKings, Coinbase, Roku, The Trade Desk, Applied Materials, DoorDash, Toast, Open Door, tons of earnings tomorrow afternoon. You're not going to want to miss it. So hit that subscribe button if you haven't done so already. Michael from Slovakia. Hey, nice. Can I check out Upwork, please? Yeah, for sure. Let's do it. So Upwork, Cisco looks like it's trying to claw its way back here. It's down now 4.8%, was down much further than that. And what you know, it came down to the top of the zone and bounced right off of that. If you guys want access to these zones, you want to learn more about what it is that we're doing, make sure you catch Don from the Don Franz Show Sundays, Tuesdays, Thursday nights. He covers these zones, how to trade around these zones, how to trade any stock you want around these zones, and they are deadly accurate. We also have an email list if you guys want to be a part of that, help grow the community. It's absolutely free. Link is in the description below. Doesn't cost you anything but your email. That's all I want from you, just to help me grow the community. Would appreciate that if you guys could just hop on that train. Every day I put out emails regarding whatever is going on in the market, and would love to have you guys there. Let's take a look at Upwork here by request. Oops. Upwork is up a little bit. Had a hell of a day today. Up 9.5% today. Damn. And now up another 3% on top of that. Let's take a look and see what's going on with Upwork. I'm doing this on the fly. I didn't do any kind of homework on Upwork today. Didn't pull up the expected earnings on that. I don't. Here we go. Q4 23 net income 17.4 million. Earnings per share at 13 cents. That looks like a beat. What was expected here? 17 cents. Actually, look, I think that's a miss. 17 cents was the expectation. I think 13 cents was the actual. $178 million in revenue. Let's see what else we got. Oh, no, they beat. Sorry. 20 cents. They beat by 3 cents. That's okay. So they came in at 20 cents. They beat by 3 cents. Revenue came in at $183.93 million. They beat by 5.77 million. Hell of a beat on that quarter. That's a 14% year-over-year growth for Upwork. That's really great, especially as much as that's gotten beaten down, and we saw a pretty slowing of growth between Fiverr and Upwork. These are the two kind of competing companies. Revenue, as I mentioned, 183 to 188 million. So this is the guidance here. Sorry, guidance for revenue, adjusted EBITDA, diluted weighted average shares outstanding, and non-GAAP diluted earnings per share for the first quarter of 2024. So that's the quarter that we're currently in. The guidance they're giving here is 183 to 188 million. Another beat that represents year-over-year growth of 15.3%. Adjusted EBITDA, 28 to 32 million. That is also a beat there. Non-GAAP diluted shares expected to be between 17 and 19 cents per share. Also good stuff. For full year guidance, 760 to 780 million, representing year-over-year growth of 12%. And revenue is expected to come in between 125 and 135 million. Earnings per share for the full year, 77 to 81 cents. So let's take a look at the daily and see how this could be. I mean, that what a move on. It's still climbing, by the way. It's up 4.25% after already being up 9.5 today. Damn. So it's trading right now at 1588, which is about right here. Upwork's on the left side of my screen in case you guys are, I don't know how well you guys can see this. Sometimes I wonder. Here's your horizontal line here. So I'm marking resistance at about on the daily, on about here. This pink line here. That's 1550. Right now it's at 1588. So if it sustains above that, we could see a nice move on Upwork and have it continue to climb here. That's a pretty tough resistance that had just moved over after hours. So we see a nice little gap up. It may come back and retreat down to that 1550 area. If it does and holds, I'd be a buyer here. Those are some great earnings from Upwork after already having a hell of a day. Checking back in on Occidental Petroleum. I know somebody was asking about that earlier. It's up slightly. Here's your 5-minute chart on that. All right, there you have it on Occidental Petroleum. Let's see if there's any earnings that are out on that. Yep, here we go. They beat earnings. They came in at 74 cents. They beat by 5 cents. Revenue came in at 7.53 billion. They also beat that by $500 million. 600. They beat that by 660 million. Total company production exceeded the midpoint of guidance by 8 million barrels a day, overcoming a third-party outage in Eastern Gulf of Mexico. So good stuff for Oxy. Warren Buffett just continues to print money. Albemarle, yeah, we can take a look at Albemarle as well. I think that's all of them. Albemarle's on the left side of the screen here. Let's go ahead and pull up that 5-minute. I did not realize that so many of you were trading this one. Here you go. Here's your 5-minute chart. This is how it's reacting real time. You saw this kind of went crazy in the beginning and now down about 1.65%. Let's get those numbers up, shall we? So looks like they came in and beat $1.85. They crushed earnings. They came in at $1.85. They beat by 74 cents. Revenue came in 2.36 billion, beating it by about 200 million, 180 million to be exact. That's a slowing of growth still by 10% year on year. Adjusted diluted earnings per share, 15.22 per share, or 22.25, excluding the LCM charge, which is a tax thing. Those are your initial numbers on Albemarle. The slowing of growth by 10%, obviously not great, but they still beat earnings. It looks like guidance wasn't all that great either. So it could be why we're seeing the sell off on this one. God damn, this stock's down 60% over the last 52 weeks. Not great for this one. Yeah. Yeah. Yes, Tank. You got that right. That's for sure. What would Upwork mean for Fiverr? It's a great question. Let's take a look and see if Fiverr has actually moved on any of this news. Fiverr, actually, yeah, it did pop. Fiverr also had a great day. It was up 7.33%. It's up another. It's up over a 0.5% right now. Come out to the daily. I think obviously it's moving well with Upwork news. It's at 30.27 right now. Let's zoom out here a little bit. Where are we seeing this land? So 30.75 is the next resistance there, the next zone that it needs to get into. 30.65. It's at 30.27 right now for Fiverr. Going back to Upwork, as we talked about, that 15.50, it's up at $16 right now. It's up over 5% or right at 5%. It looks like it's going to hold that. Might be good to go long on this one. Newton Jane says, can we take a look at Twilio again? For sure we can. Looks like it's holding above that zone like we expected it to. It came in at and missed on guidance pretty badly. They beat on earnings, but they missed on guidance pretty badly. And the stock's reflecting that. It's down 9%. But the encouraging part is it came down to 64 and is holding above that. So we'll see what tomorrow brings, but it's holding above that 64 zone, right at $64. Keep an eye on that spot. Man, this was busier than I thought it was going to be. You guys came to play. Speaking of coming to play, we do have earnings tomorrow to react to, and it is going to be a ridiculous day. If you guys didn't catch it at the beginning of the show, let me just refresh your memory and make sure you're hitting that subscribe button, hit that notification bell to get notified when I go live at 3:45 p.m. Eastern time. Tomorrow we got DraftKings, Coinbase, Roku, The Trade Desk, Applied Materials, DoorDash, Toast, and even in the morning, it's a big day too. Crocs, John Deere. We can talk about any of those if you guys want tomorrow afternoon. Penn National also, and Wendy's reports pre-market. So it's going to be another jam-packed day tomorrow for earnings. So make sure you guys are tuning back in for that. I'm the only YouTube channel on YouTube that covers earnings like this. So make sure that you guys hit that subscribe button. We'd love to have you guys a part of the email group as well. It's absolutely free. Link is down in the description below. So that's going to do it for me, guys. Thanks so much for tuning in. Yeah, Marco, DraftKings is tomorrow. So make sure you're coming back tomorrow afternoon. All right. See you guys tomorrow. Have a great night. And I'll catch you in tomorrow's earnings. Peace.